Today on the Tearsheet podcast.
Well, CAC is going up as the space becomes more competitive. And then there are unique challenges for credit products when it comes to consumer acquisition. If you want to sell a pair of shoes online, you can advertise your shoes. If someone wants to buy them, they click on the ad, they go buy the shoes. But within credit products, that's not the case. Quite often you're saying no to 80% of the consumers who you might have actually sold, sold your product to conceptually. They might not be able to close it because of credit reasons. So there's all sorts of efficiency problems there.
Welcome to the Tearsheet podcast. I'm Zack Miller. Customer acquisition costs continue to rise. And as companies converge on banking and lending, everyone is after deposits and growing their loan books, further pushing prices up. So acquisition in general is a problem, but it's particularly acute for lenders who have to turn away many of the applicants they receive because of credit criteria. Even Financial helps financial institutions acquire new customers by connecting them to other companies and sites that have user bases interested in financial products. That's all done through an API that provides search, comparison, and recommendation engine for financial services. Founder and CEO Phil Rosen joins me to discuss acquisition trends incumbent banks, lenders, and fintechs all face, and how today's consumers are challenged in finding the right financial products. Phill Rosen is my guest today on the Tearsheet podcast.
Right. So my name's Phill Rosen. I'm CEO of Even Financial. I'm originally a software engineer. I've been working in fintech for about 9 years now. And we are a platform for consumer acquisition and engagement within financial services.
So before we jump into Even, I want to hear a little bit more about your background. You were at Orchard, right?
Yeah, so I was technical co-founder at Orchard. I'd worked with and been friends with a number of the folks from, AdMill previously to that. Originally at Orchard, we were working on, tools for optimizing yield and online lending and marketplace lending. That was a lot of fun. I was working as a software engineer, building out the tech platform there.
And so when did the idea for Even start to germinate?
Actually prior to Orchard, we were also working off this thesis that financial services were evolving in a way that was very similar to what had previously happened in ad tech. That is, a series of direct relationships were becoming more programmatic and distributed and powered by APIs. As that happens, you need platforms to serve as intermediaries to bring sort of scale and efficiency and transparency to the industry. We started Orchard as a demand-side platform to sit between the lenders and institutional capital, but it became pretty clear very quickly that there also needed to be a platform for financial services that would sit between consumer-facing touchpoints and the financial service companies who are looking to acquire and engage them. Something that could go beyond advertising and really deeply connect consumers into the financial tools they needed to just sort of achieve their life objectives as they happened. So that was really the original genesis of the idea behind Even Financial was, continuing with this thesis around financial services and programmatic connectivity. It really became refined over time as we saw all the inefficiencies that were going on in online lending, and then started to realize that this applied to every other major consumer financial service product like credit cards, checking accounts, and insurance, et cetera. So that was the original genesis of Even Financial. We've been at it for 5 years now, and it's been a lot of fun.
Do you think fintech's going to take a similar trajectory to ad tech, I guess, as an industry and sort of its life cycle?
Yeah, I think in terms of, there's this overall trend, I think, in digital where you go from, direct links between companies that become more network-based and programmatic over time. It happened in travel. It happened in ad tech. It's happened in payments and HR and recruiting. And I think we're now seeing it happen again within broader consumer financial services. Certainly, the Plaid and Yodleys of the world were very much, in line with that, right? A platform that could aggregate accounts and streamline access to them for other applications. That's very similar to what happened in travel with companies like ITA and Sabre. And that's also what is the thesis behind Even Financial, only it's not about aggregating account data, it's about connecting to all the different products programmatically and intelligently.
So I'd like to talk a little bit about sort of the dynamic, I guess, in the market that you're addressing. So can we talk on the
Yeah.
acquisition side? Why is it so hard for lenders or online banks to acquire new customers?
Well, CAC is going up as the space becomes more competitive. And then there are unique challenges for credit products when it comes to consumer acquisition. If you want to sell a pair of shoes online, you can advertise your shoes. If someone wants to buy them, they click on the ad, they go buy the shoes. But within credit products, that's not the case. Quite often you're saying no to 80% of the consumers who you might have actually sold, sold your product to conceptually. They might not be able to close it because of credit reasons. So there's all sorts of efficiency problems there. There's a very complex regulatory environment. And then the reality is that these aren't really aspirational products, they're tools. So to be effective, you have to reach the consumer at the moment of need. And the expectation from consumers today is that this will be a very streamlined experience. So simply putting an ad in an app or on a website isn't sufficient. You need to actually give them connectivity into it. So that's created a very competitive environment with very expensive regulatory structures and a very complex product to develop as you try and really embed products wherever the consumers are. That's really created the need for even financial, to have a platform that can actually make that possible for all constituents. And then there's the added problem that, traditionally consumer acquisition has been dominated by 4 or 5 walled gardens like Karma and Tree, who use their brand and scale to disintermediate the banks from the consumers. It's really a conflicted relationship. A customer someone who Googles American Express is more likely to end up at Credit Karma than American Express. That's not a very great place to be if you're a bank. So finding new types of platforms that can distribute to a large number of new channels and pools of consumers is really important both to the big incumbents as well as the new challengers in financial services.
That's really interesting. I never thought of it that way. And I love the fact that you call them Karma and Tree. You're like on a one name basis with them. So I just want to drill down a little bit into what you said. Use the word embed in sort of the consumer experience. These aren't aspirational products, kind of something you do contextually or aligned with another activity on the customer side. What's the psychology, I guess, as consumers look for financial products? Like how does a consumer today sort of encounter or discover new products?
Right. Well, look, I think the primary mode of acquisition, certainly within cards and loans, is via this the high intent affiliate model, right? Where a consumer has post research, they are looking on Google or they're in social, and because they're so in market and so post research, they then get put into some sort of lead gen funnel like Lending Tree or Credit Karma or the Red Ventures or the QuinStreets of the world. And then they end up at a financial service company who has paid a premium to be top of the list at one of those walled gardens. The psychology of that consumer, right, is really educated and informed and actively searching. And there's not like a giant, really expansive pool of that, or at least not a growing one continuously, right? You're talking about any given day, how many users essentially are out there searching for a new credit card or loan product. They have to be actively searching. But the reality is that there are all these other customers who are just looking to do what they have to do day to day, who with the right context and education could be connected to something new that would meet that need. And that's a very different psychology. And that's also a very different acquisition moment that requires a deeper level of connectivity beyond saying, hey, get this credit card. It needs to be like, no, you are qualified for this. Here are the benefits of it, why you should get it. And if you click here, you're going right into account onboarding and it'll be immediately useful.
Well, Phil, can you give us an example of that type of encounter? Like can you set up a scenario like that?
Yeah, sure. I mean, I think there are a lot of traditional ones that everyone's familiar with, but they might sort of passively not acknowledge, like, the Amazon checkout experience usually has a credit card in it, right? And that's one of the most effective moments, right? Because they're trying to pay for something. You're saying, hey, you're going to pay for this. No, you click here, you get this card, you're going to get $100 off your purchase, and it's immediately usable. That's a really really great moment where it's not a user who's researching, right? But it's a user who's opportunistically seeing the benefit of something that's a tool. Other examples of that, any sort of point of sale in physical retail. If you're ever talking to a financial advisor or home improvement contractor, the opportunity to give them the consumer new solutions is always there. The reality is that every day consumers are engaging with financial services for different reasons, to achieve different things. They're not thinking about it that way. And it's about putting yourself in that moment, understanding the moment, and then making the right recommendation.
Interesting. So let's talk about the even solution. Let's talk about the ecosystem you've built and how it works, and sort of how it solves some of the issues that you described here.
Yeah. So what we offer, all of these different, I guess you could say consumer experiences, is a single API they can integrate with that gives direct connectivity to the decisioning, as well as account onboarding of, at this point, I think 50 or 60 different financial service companies, ranging from fintech challengers to the incumbent banks and credit card companies. What we are able to do is ingest data about the consumer and what they're doing, figure out what is the tool they need at that moment, and then actually say, okay, here's what they're qualified for, here's the benefits of everything they qualify for, and if they click here, they can go get it. Now, our partners can use our API for a lot of different reasons. Some are using it as straight up monetization, an alternative to maybe advertising. But a lot of our partners are using it really to extend the value they're able to deliver to the consumer. You can give larger, providing $50,000 in financing can be very valuable to a contractor or a service provider, engaging with a consumer. Offering insurance products is a great way to add additional value to the consumer in a home ownership or rental or wealth planning environment. Financial management apps who are saying, hey, you can save money by doing X, Y, and Z, can now actually say, okay, and here's the 6 things that will actually do that best for you, and really, have the connectivity into them through a single streamlined point. It's really hard for a company that specializes, let's say, in building a mobile app, right, that does advice or delivering some other service, to go build relationships with the full slate of financial service companies that they would need to have an effective platform for recommendation, and then build all the tech to connect into them, and then building all the tech to actually figure out what's best for the consumer. Even financial solves for all of that.
Wow. And what's the interface for on the product side? Are they running campaigns? Is this all automated? Do they set sort of a CPA level and you guys kind of run it? Can you give a little bit of insight into how that works?
Yeah. So we actually seek not to really define the terms that our financial service partners engage on. Mm-hmm. Often we're dealing with the affiliate marketing managers who want to pay on a conversion basis. We just onboard that, a CPC, CPL. In other cases, it could be percentage of account balance or percentage of funded. We don't really define that structure. Our system can actually onboard all of that programmatically. Mm-hmm. What we do is provide the analytics and insights back to them to say, hey, here's how your product is faring against the competitive cohorts that you should be considering. And here's how your pricing is comparing. And if you're looking to engage with more consumers and acquire more consumers, here's how you can improve your product, or you can go and change pricing. We would prefer it if our financial service companies focus on building better products and build a better account onboarding, because that delivers a better user experience. It's also going to lead to more conversions and ultimately also more revenue to even and the other side of our marketplace.
So in a way, it sounds similar in a way to AdWords. Is that a fair comparison?
Yeah, I mean, there's a lot of similarity to, I guess you could say traditional ad tech, including AdWords. Mm-hmm. There are some real differences though, right? Because we're not dealing for the most part with a display advertisement. Rather, what's going to happen is consumer data comes in. We might hit 30 different third-party decisioning systems, as well as our own hosted underwriting, as well as potentially third-party warehouses of pre-approved consumers. And then everything we're doing is based on a pre-approved specific product recommendation to that individual consumer. Mm. So whereas in display advertising, you might be saying, oh, this is $3 a click for this creative. What we're doing is actually saying, no, the conversion probability of this loan for Zack is X percent, and here's the expected revenue. Use all of that for your calculations, and it's contextualized to that decision to offer and that consumer.
Interesting. I want to change the direction of our conversation a little bit. I want to get back to even, but one of the things that we've been reporting on over the past year, I would say, is sort of like software companies get into the financial services business where they have a captured customer already that's already coming doing something, and then they introduce a debit card or they introduce some type of working capital. How do you think, I guess I'm curious just to hear your opinion on sort of the evolution, because you're sort of dealing with a market where it's you have, that to me solves for a little bit of the acquisition issue, I guess. But where do you see sort of fintech evolving to in the future?
Well, so I don't.
That was a huge, unwieldy question. Sorry.
Yeah. but no, it's no problem. But it's a great question. I don't think that's scope just to software companies, though. I think that any company could be a legacy model or a new software and digital based model with a large user base where they have a consumer who trusts them and is continuing to engage with them, has the opportunity to consider how to bring in financial services to extend the value they provide. And we're seeing that not just in software and digital, but also outside of that, in traditional models.
Yeah, retail,
and
travel.
I think it's everywhere. Like, you're going to see it everywhere. I don't think that doing that makes you fintech or a finance company, right?
Okay.
Any more than Delta is now a finance company because of the American Express partnership. I do think, though, that this motion of everybody figuring out how to bring financial services into their product is going to accelerate, because what you're really doing is saying, how can I make my services more efficient for the consumer to engage with, either via financing, either by capturing additional value for them through savings and better interest rates. It's a really great way to deepen your relationship with the consumer and also provide an additional value trade that often leads to better data and understanding of your consumer. So I think that's a sort of universal trend, and one that is going to accelerate. And we love the fact that that's happening. Obviously, that's a very core thing to our thesis and our vision for even financial is how to facilitate that. And it's really interesting because if an app all of a sudden decides to add a savings account, you could say, oh, that solves for the acquisition thing. Well, no, it just means that you now have one of the hooks into the financial services stack that a consumer needs. Once you have the savings account, in all likelihood, you're going to start thinking about, okay, how do I use that relationship to extend into insurance or credit cards or wealth management or loans, right? And it's just the basis for needing another 30 relationships.
So you see a role for even as in this scenario?
I mean, we're actively working with companies that are doing exactly that.
Awesome. So,
yeah.
So I guess
Clarity Money, for example, and Power.
Okay. Can you describe sort of, I don't know if you can talk about them specifically, but about some of the challenges there?
Well, I mean, I wouldn't say it's a challenge. If you look at Clarity Money, they have a great app. They obviously are owned by Goldman Sachs. They provide financing via Marcus. Marcus is going to have a relatively selective criteria for consumers they want to serve. There are a lot of other consumers who are using Clarity Money who would like to do even more. So, of course, Clarity Money looks to build additional relationships beyond just those core products. Even financial is a single integration that enables that. So, this is also, within the lending space, which is where we started, quite often our lenders exist both as acquirers of consumers and then use us to cross-sell into other products, right? Because, there's only so much one company can provide directly.
That makes a lot of sense. Can you talk about, it doesn't have to necessarily be specifics or non-public specifics, but where you feel you're taking the product and the platform in the future?
Yeah, I mean, so right now what we are working on is basically enabling every one of the core financial service products that a consumer uses on a regular basis on the Even Financial API in a way that gets as close to decisioning as account onboarding as possible. we started with personal loans. We launched high yield savings accounts. We now have credit cards. In the future, we'll be doing a variety of insurance products, mortgages, and wealth management. We want the full slate. But underneath that, is really about developing the intelligence to figure out what the consumer really needs, so we can put the best thing in front of them to achieve their goals, as well as the platform tools that will enable all parties on both sides of the ecosystem to really build out effective, trusted, successful programs. So there's a ton of work ahead of us. We're building what is ultimately a huge stack. We're several years into it. We've got a great deal of maturity, but this is something we'll be building out for years to come.
Amazing. And are there any thoughts about introducing your own financial products? I know when we spoke to the Intuit guys, they had a marketplace, and then they found opportunities to introduce their own products through partners.
Right.
Or is that
first
crazy
and foremost,
thought?
Even financial, we're not a consumer-facing brand, right? We're a B2B2C company.
Right. Through the
and so, right. So we work with partners on both sides. There is certainly opportunity there. Like, we just see so many consumers transacting across our infrastructure. It's millions and millions of consumers a month, all of their data and outcomes. So we have an understanding of what the opportunities are out there. But I don't necessarily think that, it would be in the best interest of even financial to introduce products that are competitive to our customers. So we really try and facilitate partnership. That's what we're focused on, is facilitating partnership and enabling companies to serve their customers the best way possible. And offering our own financial service product might be a little bit of a mission.
Yeah. Well, it was worth asking. We have time for one last question, Phil. Like, your biggest goals in 2020, kind of what your big, hairy, audacious goals, things you're focused on, biggest, opportunities ahead of you.
Yeah. We're launching a lot of platform features to really enable our financial service clients to understand how to be successful both on and off the Even Financial platform. And then we'll be launching a number of additional financial service products on our API for our partners to start offering to their consumers. So we expect some insurance products as well as mortgages to go live this year.
Phil, it's been great talking to you. Thanks for joining us on the Tearsheet podcast today.
Yeah, thanks so much for having me. Really appreciate it. Enjoyed it.